Welcome to the Clark Howard Show. This is your show where you're empowered with information you can put to work in your wallet each and every day so you can save more, spend less, and avoid getting ripped off. On the web, we're at clark.com. When you have a question for me, clark.com/ask. I have a special warning for you coming up in today's Clark Regis moment. A scam that just grows and grows that says they're going to lower your credit card interest rate. I'm going to tell you what you need to know in just 20 minutes in today's Clark Regis moment. And coming up in a half hour, out of the love for someone, family member, or friend, or sense of obligation, you may agree to co-sign a loan. I have something for you to hear before you say yes to that generous offer to co-sign for someone else. I talk so much about, with investing, how important it is for you to control the expenses on the investments you make. And the reason I pound that over and over and over again is that the difference in what kind of life you have later on can be controlled just as much, almost, maybe it is as much, by what you pay in expenses and commissions on the investments you do as just that you're putting money aside. It is a massive effect. So there was a study that came out recently that showed how intensely different it is. I read a summary of it in USA Today, that someone who pays a typical expense on a mutual fund or a higher expense on a mutual fund or investments with a typical return, okay, over a working lifetime, easily you end up with a third more money in retirement, funding 5 more years of retirement when you go in a moderate cost investment portfolio versus a higher one. And in turn, if you go into a lower cost portfolio like I talk about, you end up with potentially double the money of a higher cost portfolio and 50% more from a moderate cost. I'm not even counting in if you go to a commission salesperson, which makes the numbers even more stark. Here's why: the power of compounding. So if you put in money over the years through a 401k or a Roth IRA or whatever, and the fund choices that are available to you at a place of work, or the place you choose to put money if it's a lower moderate cost place versus a higher cost one, as your money grows and money that would have come out of fees in a higher cost choice aren't taken out, more money remains, and that money gets to grow again and grow again and grow again. And the cumulative effect is that you end up with much, much, much more money. The additional oddity is that when you go in lower cost funds, this sounds completely backwards. You know, you think about, well, you get what you pay for. Historically, funds that charge less money, investments that cost less, are higher quality funds and tend to have a higher return on your money. So you get a double benefit. But the analyses that I give you treat them as if the return is the same, just the cost is lower in one versus the other, which is, I could make it even more stark and even a sharper difference, but the point is made. That's why on my investment guide at clark.com, I pound again and again and again, low cost, low cost, low cost, low cost. And it's now possible for you to do basic investing in broad, what are known as index funds, where you own little teeny pieces of thousands and thousands of companies. Great example is the Schwab Broad Market ETF at Charles Schwab. is the closest we've ever had in America to free investing, completely free. I mean, Schwab can't be making any money on the thing because they charge basically nothing, which means you make a lot more money. And then Vanguard, the second largest investment house in the world, Vanguard charges these very, very, very low fees on all their stuff because it's a co-op. It's like a credit union for investing. It's owned by the people who have accounts with them. And so you need to make the first choice, which is to live on less than what you make and put money aside. But if you make the second choice to be going with a low-cost provider, the result is a much, much better, more secure, more independent financial future. James joins us on the Clark Howard Show. Hi, James.
Hi, Clark. How you doing?
Great, thank you, James. How can I be of service?
Well, I wanted to start out by thanking you. You've been a big help to me and my family as we not only started investing about a year ago, but I just, every time I get a chance, I'm on your website or listen to one of your podcasts. I really appreciate you and all the work that you do to help us save money and make wise decisions. We really appreciate that.
Well, that is very nice of you to say. And what I love about what we do is we all learn this together.
Yep, that's we're really thankful. But I was calling you because I've heard you several times mention the Chromebooks, and my question is, what all can I do on that Chromebook? Because I really want to get one and set it up, but I found some kind of secure email where I was hoping to use it for some of the security codes and different things to send encrypted emails and stuff between my tax person that does my taxes for me, different stuff like that.
Is there one in particular you've been looking at?
I was looking at looked at a couple. Recently, I found one called Proton Mail.
Proton Mail is getting great buzz, and it is a encrypted email that, if I remember, is double password protected. Is that right?
Mm-hmm.
Yeah, and so that is a very respected option if you're looking for extreme security, and it's the good thing is it's free, like you expect email to be.
Can you put that on would you put that on the Chromebook that you were going to strictly use?
Sure, and you can put it on your phone, because the phone environment is becoming an area of potential vulnerability. And so you can use it app-based on your phone. You can use it on your computer. You can do pretty much whatever you want with it. And it is there because of people's concern about hacking and security.
And that wouldn't violate the whole don't use email on the Chromebook scenario?
All right, if you're using the Chromebook for financial stuff, yes. Mm-hmm. Yes. Because I want you in a position where there's no question. Now, let me say this about the security issue. Are you a business owner doing a business checking account and business transactions on the Chromebook, or as a consumer, as an individual?
Consumer and individual, just for my investments and all my banking.
Then if you want to use Proton Mail on there, that's fine.
Okay.
The reason I make that differentiation is, as a consumer, you have very clear protections under the law on your banking account. You do not on a brokerage account. But your brokerage house, you should see if they offer 100% hacking and fraud protection if somebody hacks into your account. Mm-hmm. And if they do, then you're already taking great precautions using the Chromebook. And if you go the additional step of using fully encrypted and secure email like Proton Mail, that'd be fine to put it on the Chromebook. I'm not going to do it because I've got corporate, business activity on the Chromebook. But if you're just doing personal finance stuff, that's fine.
Great, thanks.
All right, now I hope that you find Proton Mail to be a good choice. I don't know if it's just techies that are excited about it or if consumers will like it. You know what? I'm going to do this. James, I'm going to sign up for a Proton Mail account too. and I'll give a review of it on the air.
That sounds great.
I'll get that done. Regan is with us on the Clark Howard Show. Hi, Regan.
Hey, Clark. How you doing?
Great, thank you. So you like to spend money?
Oh, I like to spend it as quick as I can make it.
Uh-oh. Uh-oh. So we have a special program for you.
I probably need it. My question is, like I said, I've never really had a good teacher on how to save money. I have no problem making money. I was just wanting some tips on where you would start. I'm invested in my 401k, and that's about 401k at work. That's it.
All right. So don't say you're not doing anything to save, because if you're doing the 401k and you're putting a big chunk of your pay in it, then you're already doing one of the most important things for you to do to get a better handle on money. What percent of your pay are you putting in that 401k?
I think I'm at 12%.
That's great news. That's without the employer contribution.
Without. And they match 2.5%.
So you're effectively saving almost 15% of your pay.
Almost, yeah.
So I'll tell you something that sounds crazy. As long as you're not running up crazy debt somewhere, if you're just spending the money you have left over, that's okay, because you start off with living on only 88 cents of each dollar you make.
Yeah.
I'd rather you be in a position where you're putting some money aside for a rainy day, let's say. And if you really want to start getting crazy, you'll put money in a Roth IRA.
Okay, a Roth.
Love the Roth. But if you said to me that you were saving nothing at work, or there was no retirement plan at work, and you were living on fumes, spending every penny you made, then you'd hear some panic in me.
It's not that bad, but it's worse than what it should be, is what I think. So.
Well, but if you feel that way, that means you're ready to make some changes. And so the most concrete change I'd make is I'd do the Roth IRA.
Okay.
And set it up where money automatically goes in there every month, and you start off with what you feel like you can handle per month, and then as you can, you just increase the amount you're putting into it. Do you have any debts that we should be talking about?
No, I've actually not been too bad about running up private debt, like credit cards or anything, but I do have a lot of assets. I've just recently started selling off some of my assets, trying to put money back in the bank.
Then take some of that money and put it to open up your Roth right away. You can put up to $5,500 in it each year. I'd go ahead and do that.
Now, like I said, I don't have a problem making the money. Is there anything else that would turn a better, a long-term goal than the Roth IRA as far as turning?
No, the Roth is fantastic. And if you want to, you can increase what you contribute in the 401k at work.
Just, I hear a lot about all my coworkers, I guess, investing their 401k in different ways and making money, and I've heard some lose it too, and I don't really want to get into the losing part.
just be well diversified in the 401k at work. When I say well diversified, broad funds that are available. If there's a target retirement fund where you pick the year closest to when you'd retire, you can just put all your 401k money in that, and then it's all about just getting the contributions done. So I would say that the fact that you want to save more and you're already saving the 12% means you're at a great starting point, and just keep stepping it up and you'll be in wonderful shape with your money. Here on the Clark Howard Show, I want you to stay out of harm's way. Today's Clark Regis moment is all about why you need to avoid Nancy. Which Nancy?
Scams, ripoffs, outrages. It's a Clark Regis moment.
Nancy from Cardmember Services will not go away. She calls our home voicemail every single day, and you may have received her calls as well. This is a bad scam. Illegal phone calls. And this is a terrible thing, because the calls say that she's from Cardmember Services. Call this toll-free number and she's going to lower my credit card rates to like nothing. Well, it is all completely made up and bogus. So do not respond to these calls. And by the way, it's not just Nancy. They use different names for these robocalls that are placed to you. And a lot of bad things can happen if you end up calling the toll-free number from any of these things. Is you wonder whatever happened to the federal do not call list? Well, it still exists, but the crooks have figured out how to call many times from outside the United States. They are beyond the reach of our laws. The calls they're placing using internet telephone technology cost essentially zero for them to call you, and they only need a very small response rate from people who get conned into either having their identity stolen or paying money for supposedly having their credit card debt reduced or the interest rates cut. And all that happens is you end up with a mess on your hands with identity theft, or you end up with paying money to a crook who supposedly is there to help you and not at all. So the junk phone calls you get at home, the one way to handle them is delete them from your voicemail and never, 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 not ever answer a call that you don't recognize on your caller ID, because it's never going to end well for you if you do answer that call.
Rocket Mortgage by Quicken Loans proudly supports this podcast. Rocket Mortgage brings the mortgage approval process into the 21st century. It's fast, powerful, and completely online. You see, Rocket Mortgage has taken all the complicated, time-consuming parts of applying for a mortgage out of the equation. Hate searching through stacks of old files and paperwork? Well, with Rocket Mortgage, you can easily share your bank statements and pay stubs at the touch of a button. It helps you get approved in minutes for a custom mortgage solution that's been tailored to your unique financial situation. Even better, with Rocket Mortgage, you can do all of this on your phone or tablet. It's a quick online process that you can manage from the convenience of your couch. So if you're looking to refinance your mortgage or buy a home, check out Rocket Mortgage today at quickenloans.com/save. That's quickenloans.com/SAVE. Equal housing lender, licensed in all 50 states. NMLSconsumeraccess.org number 3030.
Glad you've joined us on the Clark Howard Show, where it's all about you keeping more of what you make. Our web address, clark.com. When you want bargains, go to deals.clark.com. And when you got a question for me, clark.com/ask. You ever been asked to co-sign a loan? You ever co-signed a loan? We were talking about it in our off-air center where we answer questions off the air. We do that 45 hours a week. I was talking to our Team Clark Center Director. By the way, that's free. Get that off-air advice. You can see how to call in at clark.com. I was talking with our Center Director, Lori, about the co-signing thing. And she said, well, as best I know, everybody who ever co-signs a loan, it turns out bad, because 100% of the people who call us about co-signing are calling because they're having a nightmare. And I said, well, remember, they're only going to call you if it's blown up on them, co-signing. But you got a near 50% chance, if you co-sign a loan, that something's going to go really, excuse the bad grammar, but it's going to go bad wrong. It's going to be really awful for you. Remember, the person who's coming to you to ask you to co-sign is coming to you because they did not qualify for the loan. They either have no credit or bad credit or have had an irregular payment pattern on credit, and you, out of love for a family member, sense of obligation for a family member or for a friend, but the one that comes up on our show again and again and again is somebody who co-signs for a boyfriend or a girlfriend, and then they're no longer the boyfriend or girlfriend. They're off wherever with the car, and you're having to pay for it because they stopped paying, and your credit's ruined anyway. So the truth when you co-sign, you're taking on all the responsibility with none of the privilege. All the responsibility, none of the privilege. And let's say the most common thing, you co-sign a car loan, and that car gets repossessed. The things that go wrong for you as the co-signer are unbelievable, because the car is sold, and in most states, you're then hit with what's known as a deficiency, where the loss that the lender suffers on the car that you never drove or benefited from, you have to pay for their losses. They'll sell the car at auction, low below wholesale, and you're responsible for the entire gap between low below wholesale and what the loan balance was, plus their repossession fees, plus the legal fees, plus, and your credit's ruined for 7 years. So what do you do if you have a family member or a friend that you want to help out? You want to do it. So what the best way to do it is if you can afford it, because remember, you always have to think of it is you're going to have to pay for it potentially anyway. 50-50 shot, you're going to end up responsible for whatever the loan is. Why don't you just make the loan? And then you're going to know that if you have to borrow the money, you're going to know you made the payments. And when you co-sign, if your co-borrower, the one you're co-signing for, actually makes the payments, it's a eureka moment. It's like, oh man, another month. They made the payment. Because if you just sign and forget, it'll come back and bite you hard. Not 100% of the time. I think about the calls I'll get from somebody who is asking me about asking a relative to co-sign. And I said, well, let me tell you, this works out great for you. And if your relative was calling me or your friend was calling me and asking me if they should co-sign on a loan for you, I'd say, don't do it. Because the risk is so very high. Bryant is with us on the Clark Howard Show. Hello, Bryant.
Hi, Clark. How's it going?
Great, thank you. You know, my middle name's Brian. So we got a almost match there.
Yeah, almost.
So congratulations, you graduated from school.
Yes.
What'd you get your degree in?
Architectural engineering.
Oh, wow. Wow, that sounds like a promising career path, is it?
Yes, definitely. Buildings are always going up, so they always need somebody to keep designing the systems for them.
Yeah, because you're doing the part that people don't ever see when they look at the pretty pictures and all that. You're designing the real behind-the-scenes guts of the buildings.
Basically, yeah. So I'm going to be doing the mechanical systems.
Neat. Okay.
Yeah, I like it. It's cool.
Great. I mean, that's a great combination. You're doing something you love, and it can potentially be very lucrative.
Yes, definitely.
Great. Well, how can I be of service?
So really, I'm just trying to figure out how can I retire faster? I know I spent a couple of hours kind of browsing through your website, so I started with the whole 50-30-20 plan. So really, I'm staying at home for a year so I can pay off my student loans and get those out of the way. And also in that year, I'm just kind of doing the whole saving 20% in every paycheck. And I just wanted to know, once I start getting those savings, what can I be doing to, really making my money work for me?
Oh, what a great setup you've given me here, because I'm so excited for you. Because really, you start off out of school living a frugal existence and living at home so you can wipe out the student loan debt. You're on a fast track to do that. And with that money you're saving at the firm you're going to work for, will you have access to a retirement plan there?
Yes.
And with your mentality about wanting to save, what's the maximum percent of your pay you can save there?
They'll match up to 4%.
Okay, but beyond the match, do you know how much percent of your pay you can put in?
I guess it would just be what is it, like 18,000 that the IRS says?
Yeah, there's a
like
cap
that.
each year. So if you put in up to that,
okay,
that would be great. And then you'll have hopefully a well-diversified series of choices about where the money goes into. If the easiest of all choices, because you're in your early 20s,
yes,
easiest of all choices would be to go in the Target Retirement Fund 20. I wonder if there's 2055 probably.
Okay.
Which would carry you through your working lifetime. What they do in a 2055 fund is for decades to come, you're very heavily invested in various stock markets around the world and thousands of companies, and then other investments they put into the mix. And then as you move through the decades, it will get steadily more conservative in how they invest the money. Then you don't have to figure out, should I be rebalancing? Should I put money in this or that or the other? It's just done for you all in the one fund.
Okay.
At your employer, do you know yet if you have the option of a Roth 401k rather than a regular traditional 401k?
I think I have the option for both. I think so.
Then I would go Roth 401k.
Okay.
Because especially early in your career, you're not likely to be way up on the income scale yet. And so taxes are less of an issue, and that gives you a big advantage to going after tax, which is what the Roth 401k does, instead of before tax like the traditional 401k.
Okay.
So if you get up to where you pop in 18 grand, that's a lot of money to be saving. Do you want to save any more than that, or have we really exhausted your funds yet?
Well, really, I don't know if I'll be able to get, max out the full 18,000.
That's okay. I was just trying to get you that direction. I was asking kind of a sneaky kind of way how far you want to go on that path. But when I think about what's the easiest way for you to build your wealth, that's where you start.
Okay.
So I just am so thrilled about your future. And when you get to that max in that, then I want you to start thinking about the Roth IRA as the second place you start stashing cash.
Okay.
And the more you do that stuff, the more you're going to be in a position to be able to have the freedom to do what you want to. Probably in about 20 years' time, you'd be free to live the rest of your working years however you want, pursuing whatever you want to do. Monica's with us on the Clark Howard Show. Hi, Monica.
Hi, how are you?
Great, thank you, Monica. I'm sorry to hear that you lost a loved one.
Say that again, I'm sorry.
I understand you lost a loved one, is that right?
Yes, I did. My grandfather.
I'm very sorry.
Thank you.
How can I be of service to you?
My grandfather left me $100,000, and we've paid off all of our debt, and we still have about $70,000 left. The only debt we have left is our house, and we still have PMI on our house, but we're not in love with our house, and we're looking to probably move within the next year. We've only had the house for about 2 years. So what I want to know is it ideal for us to try to pay down the PMI on the house, put a big chunk on it to pay the PMI down, or should we wait and invest that money until we decide and put like a chunk down as a down payment on our new house that we are going to try to buy in the next year or two?
What kind of price point house will you buy the next time?
Probably no more than like $175.
Okay.
Right now, our house is valued at probably $145.
And you owe on that loan how much?
I think $135.
So if you took a substantial amount of this money and you put it against the loan, you got your 2 years in. One provision in order to remove PMI, were all your loan payments over these 2 years on time?
Yes.
So you can pay down on the balance, and there should be a contract. It should be in the contract language for your mortgage, where if you have 22% of the original loan balance paid off, that you are free to automatically remove PMI. without an appraisal.
Okay.
There should be some language like that. Have you read the PMI language?
Well, we had them send us something. Like, I called them, and they said in 10 days they would mail us something, and they sent it to us. And, I mean, they were very vague about it. And they basically said that they could possibly remove the PMI, but they wouldn't give us a number as to how much.
Well, I don't like that at all. Your original loan contract should specify clearly under what conditions you can remove the PMI, and usually 2 years in the loan and on-time payments and having the equity. So you could use the appraisal clause in your loan documents that would allow you to use some of the $70,000 you have to pay down whatever's necessary following an appraisal so that you appraise out a PMI.
Okay. And that's what you recommend to do with part of the money to get the PMI off? Because I think it is.
Yes, but that's why I was asking if there's a provision in your loan documents that allows you simply by paying off a portion of the loan free of an appraisal to be out of PMI. That would be great and even better, because then you're not paying for the appraisal.
I don't believe that we have to. It says, I have the letter here, and I would be happy to send that to you.
Oh, okay. You want me to review the letter? That's fine.
Sure.
I'll put you on hold, and Kim will figure out how to get that letter for me to review it.
Okay.
But that would be a good use of money for you to, you'd have a much lower mortgage payment. You'd be able to restore some of the cash that you'd want for down payment on your next home, and it would just give you more breathing space. I said that wrong. I said the only lower part of your payment, even though their balance would be lower, would be that you're not paying PMI. You still have to make the same payment to your lender. Will is with us on the Clark Howard Show. Hello, Will.
Hi, Clark. It's a pleasure to talk to you.
Well, great to have you here, Will. You have a suggestion about something that I'm not really thrilled when people have them, but you've come up with a way to make them thrilling?
Yes. I have friends who do a lot of electronics work, and every once in a while they run into a supplier that has a weird-looking or an odd-looking or a questionable website, and they have decided that the simplest way to be safe in ordering parts from that is to go out and get a Visa gift card. That way it's anonymous. They can use that. It's not tied to their bank. It's not tied to their financial situation at all. And they can just use that card. The only drawback is they have to know a little bit ahead of time as to approximately how much the item is going to cost them.
So the idea being that if somebody turned out to be dishonest and they were going to try to loot their account by doing all kinds of charges to the credit card, is that all they would be able to get access to is the money that's on that gift card.
They're isolated. It's not tied. They go one step further. They even go to a bank where they have either never had dealings or have closed accounts. So they can't even find another account at the same bank where they buy the gift card.
Now, the only downside to this, I will tell you there is one downside, and that is that if you buy something with a credit card and it's not delivered to you, you have the right to dispute the charge, and you generally, not always going to win, but you're usually going to avoid the loss on that item. If you use a gift card, gift cards don't have that protection under law. It's considered to be almost like an alternative form of cash.
Mm-hmm. I had heard you say that. I had forgotten that.
So that one part of you would lose whatever money the dishonest seller absconds with from the card, but there wouldn't be any other money at risk.
That's probably, in most cases, an acceptable risk.
Yeah, and that's the thing. You know, when we're doing business with strangers sight unseen, it's all about gauging the proper mix of risk that we're willing to take on.
Mm-hmm.
And there's a website that I buy from time to time that is it's not the best in customer service. And so I make sure I never buy expensive items there, because I know I'm going to get burned from time to time, even though they have great deals. Mm-hmm. So it's all about figuring out what is an acceptable level. It's the rule I have with eBay, too, about how much I'll buy on eBay, never more of an expense than what I might lose sleep over.
You know, when you're going to buy a car, pricing information is great and necessary, but there's more to doing it than just the price. There's the actual buying experience. If you want to enjoy a better one, you should go to a TrueCar certified dealer. They're there to help you find the car that you want, and they're also what make TrueCar unique. With TrueCar, you can connect with a local certified dealer that you choose, so you can lock in a guaranteed savings off the MSRP and enjoy a totally better buying experience. And by better, they also mean faster. Over 2 million cars have already been sold to TrueCar users who have visited their TrueCar certified dealer. And there are over 11,000 TrueCar certified dealers nationwide, so it's probably pretty easy to find one near you. And check this, for a new car, average TrueCar users save $3,279 off MSRP. All right, so you're probably wondering, how do I do this? It's easy. Just go to TrueCar.com or, right there on your phone, download the TrueCar app. You can find the car you want, see the TrueCar pricing curve, which shows you what other people in your area paid for the same car, and that way you can know you're getting a good price and feel confident. Then you'll get a guaranteed savings certificate from the TrueCar certified dealer. Go to the dealer, and your guaranteed savings off MSRP will be honored, and you enjoy a quick, easy experience. How's that for car buying? So when you're ready to buy a new car, or even a used one, visit TrueCar.com or download the TrueCar app and enjoy the better car buying experience. Some features are not available in all states.
I'm so glad you're with us on the Clark Howard Show, where it's about you learning ways to keep more of what you make. Our web address, clark.com. When you have a question, clark.com/ask. Coming up a half hour from now, if you carry an iPhone, there's something you need to know. You have a friend or family member who carries an iPhone, something you need to know how you're ending up spending more money than you need to, and there's a workaround to lower the cost of using an iPhone I'm going to share with you in just 30 minutes. I want to talk right now about something that I know is going to generate Clark Stinks. You know what Clark Stinks is? It's our message board where you get to it through clark.com, our community section. So where people who are upset with me, maybe stepping where I should not, or giving opinions they don't agree with, you post. Anytime I ever talk about anything to do with dentistry, wow, do we get the Clark Stinks. So I'm going to do it anyway. Do you know that there is a treatment that's been available in Asia for decades that is only now coming to the United States that eliminates you having to be drilled for a cavity? It is inexpensive to do, pain-free, and is done in a blink. It is legal now in the United States, has been so since sometime last year, and it is under the brand name Arrest, like you're under arrest. One of the stories I saw about it talks about how people at dental schools, people that are professors at dental schools, are all like gaga over this and all excited about it as a way to deal with cavities, particularly for children. Taking something that could be terrifying to a kid and bam, pain-free, they're done. So what this does is it allows a dentist to stop the progression of cavities and prevent them. And dentists are adopting this practice by practice. And I saw an item in the New York Times where the head of a dental school said, I would encourage patients to ask for it. So if I ever end up with any more cavities in my mouth, fortunately I haven't had any in a long time, I'm going to be asking to see if it can be taken care of with the rest. It has a discoloration to it, so you only want to have it painted on a tooth further back in your mouth. You don't want to have it on one of your front teeth because, well, it would look ugly. But what a fantastic thing, recommended for especially for the elderly and for young children. And eliminating pain and reducing cost and getting a dentist onto more serious things that they need to do. How great is that? Now, if you're a dentist and you hate what I've just said, again, go to clark.com, go to our community section, our message boards, go to Clark Stinks, and set me straight. Constance is with us on the Clark Howard Show. Hi, Constance.
Hello.
How are you?
Doing well.
Constance, you have a very unusual question for me.
Yes, I was wondering, I have a new phone app that allows me to talk to my car with the ODB reader, and I was curious.
Slow down. We need to explain the OBD to people.
Oh, it's that little gadget underneath your steering wheel that you can plug into your vehicle, and it reads those DTC codes. I think that's what it is. So
what it does, let me see if I can put this in layman's terms. So there's this neat thing that's on cars built, just about every car on the road now, because it started being used universally in 1996. And there's a place right under the dash that you can plug into, and it will allow, in states that require emission testing, it allows an instant reading if the car is polluting the air or not. It allows you to see if there's anything wrong with any major operating system in the car, all with a simple digital readout that's plugged in. Can I tell you another use I saw for it?
What's that?
When I was at the CES, what they used to call the Consumer Electronics Show in Las Vegas earlier this year, I got to watch a demo where you now can plug a device in that will give real-time information on how the vehicle's being driven. So let's say a company wants to monitor its drivers out in company vehicles, or a parent wants to monitor how a teen is driving. You have either real-time or, if you wish, delayed access information about how the vehicle's being operated. It's phenomenal what stuff is right there in that thing. So I interrupted you. Is the device you're using specifically to see how somebody's driving, or is it vehicle performance?
It's two things. It's vehicle performance, but it's also for any roadside assistance that I would need if I broke down. It automatically calls the emergency service to check on me.
Isn't that nice?
It is. So what happened recently was my car broke down in the middle of the road, and I didn't realize what was going on. And it immediately texted me telling me what my code was and then how to fix it possibly, and it gives a few examples. But what was very interesting was it also gave me estimates on each way to fix my car. I was curious if you've ever seen that or have any suggestions on other services like that.
I have not seen anything that is as sophisticated. Is this one of the ones you get from the cell carriers that have been marketing this?
Yes, I did.
And is this like $10 a month, $15 a month?
It's 10.
Okay. So that's kind of where the price has been for a lot of these monitoring things, is about 10 or so a month. You know, you have a situation that has proven the worth of it. It's like the same thing, you know, where GM customers have loved the OnStar and the things that OnStar does in the event that you're in an accident, where it immediately calls for help and identifies exactly where you are. They can talk to you and see what injuries you have and all that. These technologies, if you don't mind the monthly fee, are fantastic.
Well, what's happened so far is it's still sitting at the mechanic.
Ooh.
It's okay. But what was funny was when I had the vehicle towed to the mechanic, that day my battery discharged, and they called me up the next day and said, we think something's also wrong with your battery. And I said, no, I have 3 months of seeing a health report. I get it emailed to me. And all of a sudden, my battery goes dead at the mechanic shop. Did someone leave on my lights or door open? And so they couldn't charge me for that. So I think I'm saving my money, at least the $10 a month, by that alone.
That's great. So you're a big fan now.
I am, and I can't wait to get my car back because I'm going to try to negotiate my bill based on the estimates that I've seen in this report.
That you've got to do up front.
Oh, okay.
Anytime you have a vehicle at a mechanic, what I recommend, if it's an unknown thing, like what it's going to cost to repair, all that, on the service ticket, you require an estimate before authorizing work. Once the work's been done, you can't negotiate backwards.
Good to know.
So, yeah, have they started doing the work yet, or are they still trying to noodle what's wrong?
They've done 2 items, and they're noodling on 2 more.
Okay, so just ask them for estimates before they go forward with repairing those 2 additional.
Will do. That's great advice.
And I'm so interested in the fact that this was such a great thing for you in what was not the best circumstance.
No, but they did call, and it was nice to automatically have someone on my side. That's what I've been using so far. But if you have any other information, I'd love to know.
No, I think what you did, you have this backwards. You just helped your fellow listener.
Oh, well, fantastic.
Yeah. I mean, you're the one who's made it happen here by sharing a real-life, real-world experience, how having the diagnostic monitoring has been such a positive for you. Kevin is with us on the Clark Howard Show. Hello, Kevin.
Hello, Clark. How are you?
Great, thank you. You are helping your mom. Tell me about that.
Okay, well, my mom is a lifelong renter. She's never owned a home. She's recently turned 60. And the apartment market continues to grow and rent. So I'd like to get her to a point where it's a stable home where, you know, more control over the long-term payments. So that being said, she's got a 401k and an IRA that total roughly around $70,000. She has a job. She pays her bills. She manages that on her own. Her long-term retirement really will probably fall a lot on my brother and myself. So my question, does it make sense to pull those funds out of that IRA and 401k and put it towards a home?
Definitely not.
Okay.
Definitely not. But I have an alternative for you and or your brother to consider. And this happens a lot in families because with your mom being 60 and you and your brother are how old? In your 30s?
Yes.
The better way to play this is you or your brother buy a place with the intention of renting it to your mom and giving her a fixed rent that she's not going to have to worry about going up over the years.
Okay, and that was one of the options I was considering.
Because then you're not eating into her available capital that she'll need to live on when she ultimately retires, and you'll deal with the cost uncertainty of the higher and higher rents, and the ownership cycle will benefit you or your brother more owning the property for a long time. And if your mom's needs change, she's not then saddled with the property that she's got to figure out how to dispose of at a have-to time.
Mm-hmm.
And if your mom does need to move on to a different housing or living situation, you or your brother, or both of you, if you did it together, can then keep it as an investment property and rent it to other people at the prevailing rents at that time. Or you could turn around and sell at that time. But you wouldn't be under with her resources, you wouldn't be under the same pressure she would of having to get it unloaded.
Okay, that's very helpful.
And by the way, there are so many benefits to you or your brother owning it as an investment property. You just have to charge your mom what would be considered to be a reasonable rent, but you certainly don't have to keep raising a rent or anything like that, like's happening in the open market. So I think that would be, if you or your brother both are in a position to do so, that would be the way you could really, really be of help to your mom. With today's low interest rates, even on an investment property, you could get a carry cost on it that would be such that you could almost certainly provide your mom a very reasonable rent. Brian's with us on the Clark Howard Show. Hi, Brian. How are you doing?
Doing good, Clark. Thanks for taking my call.
Certainly. You want to talk about cell phones. What's up?
Well, it's an offer I got that I don't know is legitimate or not. It's a thing called T-Mobile Tuesday, and they supposedly give away a lot of free stuff, but I don't know if getting the stuff means signing up for a bunch of mailing lists, and if it's just a way to hand you off to other mailing lists and give your information to everybody, or if
it's part of something. Brian, you know, T-Mobile does this thing called the Uncarrier, where they're trying to differentiate themselves from particularly Verizon and AT&T. And so they're always doing different stunts. And the T-Mobile Tuesday is their latest stunt. So they do joint marketing things where they give things away, free movie tickets. They did one where they did free pizza that crashed and burned on them because too many people wanted free pizza and they couldn't get it done. But people who are T-Mobile customers love T-Mobile Tuesday and get all kinds of freebies every week. There's been no gotcha for people about suddenly you're getting deluged with spam or spam texts or anything along those lines.
So the deals are pretty legitimate.
They are completely legit. I have not had any complaint about anything other than people who didn't get their pizza.
Well, I'll give it a try then.
So are you getting a good deal on T-Mobile?
It's the best plan I've had for the money, for the data and everything so far. I just don't usually sign up for any kind of extra promotional type things on my plans, and this is the first one that I've thought about because I have been happy with their other stuff.
Well, great. Well, you enjoy it and download the T-Mobile Tuesdays app to your smartphone, and then you'll be able to access all the deals.
Well, I'll let you know.
All right. Have a great day.
Appreciate it.
Sure. So, yeah, isn't that funny? Somebody says they're going to give you stuff for free. You automatically assume that it's bogus. And I want to tell you, in the cell phone space, there was just a review by the technology writer extraordinaire, Walt Mossberg, who said that when you're looking for cell phone service, the best to look at in the country right now is republicwireless.com. You may have heard of that, you may not, but when you're looking for a deal on a cell phone, the Republic Wireless plans are the lowest cost in the industry, and it is a very, very good cell phone service that is a brilliant technology that has just had a tremendous breakthrough where the technology, if you were on it in the past and you're kind of iffy about Republic Wireless, the new technology is beyond belief. It's so good, and your calls are now so reliable.
Stay tuned for 60 seconds of AP News headlines right after this podcast.
I'm so glad you're with us on the Clark Howard Show, where it's about you learning ways to save more and spend less. And don't let anybody ever rip you off. Our web address, clark.com. When you have a question for me, clark.com/ask. But wait a minute. Are you aware that we offer free off-the-air advice where you can talk with a member of Team Clark 9 hours every weekday completely for free? I already said free, right? I want to make sure you know it's free. And so you need to know that the purpose of this show is to empower you with knowledge you can put to work in your life. And I want you to be able to get the guidance and advice you need when it works for you. When you go to clark.com, you can see how to get the free off-the-air advice. Apple is having a bit of a midlife crisis right now. They're having trouble moving the iPhone into the marketplace. The 7, hopefully for Apple, will help them recover some mojo as they've been losing a lot of market share. And so they're trying to get revenue. So they are in a hideously ugly fight with a very popular service called Spotify. And Spotify is going crazy because Apple rejected their newest app for iPhones. The reason is Apple, and if you're not aware of this, Apple, trying to goose their revenue, has put up a toll booth for apps that charge a monthly fee. And so if you have an app on iPhone and you sign up for the service through your iPhone, you will pay 30% more for it than you would otherwise. So Spotify is like, wait a minute, we're $10 a month, but if somebody signs up for us on the iPhone, it's $13 a month, and Apple takes the $3 through the toll gate. So Spotify now has the ability for you, if you're an iPhone user, to go to Spotify's website and sign up and then be able to use the service at $10 a month. And by the way, if you're a college student, Spotify is $5 a month. And I'm talking about the premium because you can get the free version of Spotify otherwise. But this thing with Apple charging a toll is unconscionable and unreasonable and ridiculous. I don't care how much you love your iPhone. This is wrong. If you open up your MacBook, let's say you're an Apple person, you open up your MacBook, or you're a PC person, you open up your PC, and you go to a website on your computer, or use Google Chrome and you go to the app kind of bar there where you click on the icons, nobody charges you a ransom or a toll to use their functions on there. But Apple, again, desperate for revenue, is doing this silliness. I want you to know that whenever you're signing up for any subscription service, do not do it through Apple. Do it through the service you want to use, and then use that service on your iPhone. You know, being greedy is never a good thing. The old expression, pigs get fat, hogs get slaughtered. Apple is a very successful company that has made great products. And I want to share with you that with my kids who are Apple freaks, we've been to the Apple Story thing where you go and you talk to the geniuses. The quality of the service is tremendous. It's really great. In an era of customer no service, the service they've gotten repeatedly is very impressive. But, you know, we pay when we go there and we do something. One of my kids broke her screen on her phone. The funny thing was, to replace her screen cost the same as what my Android phone cost to buy. But anyway, they were very nice and they did it, and they did it quickly, and they did it with a smile. But this thing going on with the apps is wrong, and the toll booth needs to come down. Gary's with us on the Clark Howard Show. Hello, Gary.
Hey, Clark, how are you?
Great, thank you, Gary. How can I serve you today?
Clark, my wife and I are lucky enough. We have a home in the Chicago suburbs that is under contract. It's about to sell. We own the home. There's no mortgage on it.
I love that.
Well, we do too. After commissions are paid and taxes and what have you, we're going to have quite a chunk of money in our pocket. We own another home that we currently live in Florida, and we're thinking about some rental properties in Florida. But before we do that, we'll take 6 months to a year to do some research, and we were wondering, if, with a very large chunk of money, roughly $500,000, what could one do that's risk, minimal risk, that will earn more than 1% in a savings account? What are your recommendations?
You can't do that. You have to just suffer with the 1%.
Is that right?
Yeah, because anything else other than doing one of the online savings accounts where you earn the 1%, anything else will have potential loss baked into it. Now, you sound entrepreneurial because you're thinking about rental properties. If you have the time...
We actually have, one other, and this home was for a while a rental property for us, but it was for a while our primary home. Well, so, we're thinking about more rental properties, but here in the Florida area.
So if you got to bide your time for a while, I know this is going to sound crazy, but I would put a big chunk of that money into the 1% that you're going to earn at the online bank. But then consider, since you have the entrepreneurial streak, doing some lending to people through Prosper and Lending Club.
Okay.
Have you heard of either of those?
We not directly. I have looked into or done some research on peer-to-peer lending and even peer-to-peer mortgages. So I'm assuming that is what you're addressing.
Yeah. So in this case, you'd be doing personal loans to people, usually for terms of about 3 years. But the default rate is somewhere typically around 5% if you stay to people with higher credit quality.
Okay.
And you get really nice returns on your money. Again, you have a risk that, 5% of the loans you make could go what they call non-performing. In other words, you don't get paid. But on the rest, you're making enough return on your money that I look at it as an extremely low-grade risk.
And the names of those companies again were what?
Lending Club and Prosper.
Lending Club and Prosper.
Yeah, Lending Club is under a cloud right now because they had a executive that was doing some bad things and got booted out. So people have gone from being all excited about them to being down on them. But I think there's opportunity with the part of this money that I'm not talking about a big chunk of it, but just enough to play with that does goose that return a little bit past that 1%. Now, on buying the rental properties in Florida, I have a special warning for you. I don't know if you heard me talk about this, but a lot of places where if you're looking at maybe a condominium or anything like that, or a homeowner association-controlled community, are going through processes to ban rentals.
Yes, indeed. Yeah, we're familiar with that.
So it's important that you buy in a community where you're not going to have to worry about those kind of restrictions being put in place, because that's brutal. If you buy a property that is an investment to you and you're planning to make it a rental property, and then suddenly it becomes a zero-income property that's a wounded duck that you have to sell, that's a bad, nasty place for you to end up in.
Indeed, indeed.
Well, good luck finding the rentals, and I love rental properties. I do have one rental property in Florida, and it's been extremely profitable for me.
Excellent. Well, we'll keep our fingers crossed that things go well in the future.
Well, it sounds like you did really well with the property in Chicago, so continued success with the real estate. Maureen is with us. Hello, Maureen. How are you today?
Hi, I'm fine. How are you doing?
Great, thank you.
So I'm a baby boomer. I live in Florida. I'm 62 and in good health, thank God. I am just, so I guess I'm probably a little late to the game. I'm just now looking at some long-term care insurance.
Actually, you're at the perfect age.
Oh, well, I'm very glad to hear that.
Yeah, late 50s to early 60s tends to be the ideal window to look at long-term care insurance.
Well, but what I'm reading and what I'm looking at, it to me, it doesn't look like a good investment of money. And so I have some other annuities and I have some life insurance, and I'm just wondering, say, if I were to have to pay, just pick a number, $300 a month towards long-term care insurance, would I be better to put $300 a month in, added into my life insurance and that I can borrow against, or added into one of my annuities?
That is a great question. The problem with the long-term care insurance market is it's broken right now, and people are suffering from what are called death spirals, where the insurers on long-term care insurance don't guarantee the premiums. And at any time in the future, they could say, oh, that premium you were paying, how much did you say a year, $3,000?
Well, no, I was saying like $200 to $300 a month.
So, okay, so $2,500, $3,000 a year.
Right.
that, oh, no, that's now $12,000 a year or whatever.
Right, and then at a very time when you're on a fixed income, because I am still working right now, that there's no way you can afford it, and that's what I've been reading about. So it makes me very nervous.
So there is a product today that you could consider that is buying in a whole life insurance policy. You can buy a long-term insurance rider. So what happens is, let's say you buy a policy of, I'm just going to throw out crazy numbers, okay?
Okay.
You buy a policy for $250,000.
Okay.
The policy may offer a rider that would allow you to use much or all of that for a living benefit for long-term care instead of paying a death benefit at the time you die.
So if it turns out that you need to use it during your life, then you can use it, and then if you don't, it stays to go to your beneficiary.
Exactly. Now, the reason this is something that people have been seriously considering is then your premiums are guaranteed. Because the insurer's been able, in that case, to calculate exactly what their risk is. Their risk is fully actuarially sound. They know that they're going to give you benefit A if you pass away or benefit B if you need it for long-term care. And they've already calculated what the risk is for them. Where with long-term care insurance, the risk is so open-ended and they have no idea what liability they're going to end up with. And that's why they say later, oh, we were just kidding about that premium. We're now going to charge you $1 zillion.
Yeah, even when you took it out at an age where you're healthy and it made sense at the time.
Right. So that's why it is reasonable to consider the alternative of having it within a whole life policy. Or you could do just what you said. You could take an existing policy you have, contribute additional amounts to it, or if you're allowed to buy in additional coverage, and then, if needed for long-term care, borrow against it. And so those would both be very viable alternatives to long-term care.
Okay, awesome. Thank you. Yeah, like I said, everything I read just made me very nervous, and I went, that's a lot of money to put in to just absolutely be throwing away.
So you know whose fault all this is my late mom. My late mom had long-term care insurance and was in worse health and lived far longer than the actuarial tables would have calculated. And she cost the insurer over the years massive amounts of money, so much that every time we'd have to move our mom to a higher level of care, the insurer would then make us re-qualify for coverage all over again because they were just trying any way they could to get out of having to pay it. And that's what happened was people ended up living longer and living not as healthy as the insurers had guesstimated years and years ago when they sold these policies. And that's why people who own them now are getting clobbered in the wallet. Albert joins us now on the Clark Howard Show. Hello, Albert.
Hey, Clark, how are you?
Great, thank you, Albert. What's going on in your world?
Well, I was listening to you talking about credit, and I know that you'd mentioned that available credit to use credit, if you can keep the ratio under 30%, that you're doing well. Under 10%, you're doing great.
That is right.
What I was wondering is, should I be pushing my credit card companies to continually increase my limit so that the denominator gets bigger and bigger?
100% yes. If you can get through credit review and different credit issuers, different banks and credit unions have evaluation cycles that you can request a credit review for a possible limit increase every 6 months or every 12 or 18. You know, it's typically 6, 12, or 18. And they'll tell you when you call up, you know, am I eligible for a credit limit increase this time? Then you positively want to do that. Because I have one card that is for a particular retailer. It's a MasterCard, but it's issued for a particular retailer, and I cannot get them to raise my limit. So I have to be very careful using the card because it has an extremely low credit limit. So in your case, if you can get limits raised, that will definitely be a help to your score. How many cards do you have right now, Albert?
Well, I've got 5 cards.
That's plenty. That's a good number.
When I was in college, they were handing out free T-shirts, so I would,
The T-shirts are gone, but you still have the credit.
But I still have the credit. Would that in any way hurt me later on, once I've pushed that credit card to give me the most available credit, if I want to apply for another mortgage?
What a great question. A mortgage is the only time I ever hear from anyone that having available credit becomes a problem instead of a benefit. Occasionally, a mortgage underwriter will be worried that with the available credit you have, that you could get in over your head with a mortgage added in. But if you're showing a very low utilization rate on your credit, I would be surprised if that became an issue.
Okay, great. Thank you.
All right, and best to you. And what ratio are you at now? What percent available are you using?
I'm under 30, but I'm not yet under 10, but I'm working on it.
Well, but under 30, you've already got a great credit score, don't you?
Yes. No, it's pretty good.
So it'll just get better from here the lower your utilization goes.
Thanks for listening to the Clark Howard Podcast. Download new episodes every Monday through Friday at podcastone.com. That's podcastone.com. Stay tuned for the latest AP News headlines from Podcast One right after this.
The update. I'm Carlotta Bradley. Investigators want more information to try to find out why a hot air balloon hit power lines in Texas, killing all 16 people on board. Robert Sumwall is with the National Transportation Safety Board.
If there are people who have received social media accounts of, we've seen pictures from taken above the clouds. It was a post from Facebook or Twitter or something like that. And if we have those kinds of things, if people would share them with the NTSB, we would absolutely like to know about it.
He was asked about a memorial at the site.
There's some bales of hay with some flowers there. And it's very, very moving.
Lockhart County Justice of the Peace Judge Matt Kiley talked about identifying the dead.
We are still waiting on dental records for the positive identity of 14 people.
AP Update.